Welcome, everyone.
Hello, hello.
Good
We are
morning,
just
everyone.
waiting for a few more minutes until we have a few more people joining us, and then we'll go ahead and get started.
How are the slides? Can you see the welcome slide or?
We're going to go ahead and get started. Hello, hello, welcome. My name is Miriam Parker. I'm the Executive Director of Chicagoland Food and Beverage Network. And we are hosting Leveraging SBA Loans for the Food Industry. A little bit just about Chicagoland Food and Beverage Network. We are a group that focuses on the cross section of the various businesses and professionals within the food and beverage industry. And essentially, we work on providing networking opportunities, educational experience. This is all to advance and forward innovation within our community. It's a great pleasure for me to be partnering with First Women's Bank today. We have Gabe Beukinga, who is the president of commercial lending for First Women's Bank. He is the top SBA loan provider in the nation, and so he's a great expert to be presenting to us today. He has helped over 700 businesses provide SBA financing for their business growth, and then essentially that in turn is about $1 billion in funding to help grow small businesses throughout the country. So with my greatest pleasure, I would love to introduce Gabe. And Gabe, if you want to go ahead and present your slides, we'll go ahead and get started. Oh, and I also just want to say really quickly, if you have any questions, please put them in the Q&A and then we will address those at the end. But I have a feeling that Gabe is probably going to ask throughout the presentation if you have any questions as well. So if we don't get to your question right away, we'll definitely get to it at the end.
Well, good afternoon, everyone, and thank you so much for that warm introduction. I don't know if I'm the top SBA lender. I've been doing it for 20 years, and as I shared, a one-trick pony. I've done it my entire career outside of college, and it's been an absolute joy. So thank you for having us and that warm introduction. I appreciate everyone joining us today. The goal of today's webinar is not to turn you into an SBA expert, and that's what we're here for. But the goal is to help you understand what financing options exist and how they can be used strategically. We'll have more, as Miriam mentioned, we'll have more than enough time, as my presentation will only take about 20, maybe 25 minutes. So if there's questions that come up during the presentation, please feel free to ask. You do not have to wait till the end. I like the collaboration, so please chime in as a question comes up. And just maybe to level set, in my experience, I've seen like many operators think about financing only when they need capital. And I would challenge everyone to think about financing as a strategic tool that can improve cash flow, support growth initiatives, create some flexibility during some uncertain times, which I think we all would agree we've had, over the last handful of years. And then I'll also touch on some recent changes within the SBA program, as well as some practical examples of how businesses within your industry are using SBA financing. So with that, we will get started. Just a little bit about First Women's Bank. We're a national SBA lender focused on helping small businesses across the country, achieve growth. We have a very specific mission of around helping support women entrepreneurs and closing the gender lending gap. And with that said, we also finance businesses of all types across the country. I think what really differentiates us is we consider ourselves advisors first and lenders second. We spend a lot of time helping clients determine the right capital structure, not simply determine whether a loan can be approved or not. And we're also very transparent that if there's an opportunity that makes sense for a different loan type or different lender, we bring in those partners. So we want to see what's best for the business owner, whether we're going to be that resource or not. And that's kind of what this slide gives an overview of. We really want to connect our small businesses with innovative capital solutions, whether it's internally at FWB or externally. And then we also want to build a community of resources and support for our small business community. Who we serve, we really serve kind of everyone. I'll touch on this a little bit. We have a very active business banking team. That's where our SBA lending products sit under. Business banking is really everything from 500,000 or so in revenue up to 20 million. We have an emerging middle market team that kind of handles companies in that 20 to 75, even 100 million space. And then we also have a very active nonprofit and foundation banking platform as well. This is some of our small businesses that we bank. These are some franchises specifically. Within the SBA program, we do all types of lending, from franchise lending to M&A, commercial real estate, and a lot of that is possible by our corporate mission partners that we have. As you can see, we have some of the country's largest brands and corporations. They carry significant deposits here at the bank, and that allows us to fund the small business loans that we do. So we're very proud of our small business banking portfolio, very thankful for corporate mission partners, as well as our nonprofit partners that we have as well. All right, to get into kind of the meat and potatoes of the program here, and maybe before we even get into the specifics of the policy, because there's been a new SBA policy to really help support the food supply chain industry. And before we get into the specifics of that, the change is significant, and it's significant because it's not all that often SBA will make policy changes like this, but this is a clear signal that the agency views domestic manufacturing, food production, distribution, warehousing, logistics, all as strategically important industries that deserve additional support and investment. And I can share from a lender's perspective, This change creates a stronger incentive to deploy capital into the food supply chain, the manufacturing space. It provides, and I'll touch on this in a moment, but it provides an enhanced guarantee to the lenders and expands the eligibility to make these loans more attractive, and reduce the risk for lenders and create some more flexibility around structuring for the business owner. Um, and I would say, for us, we're one of the top 100 SBA lenders in the country. There's about 1,300. And we try to be really good stewards of the SBA program. So, we want to align our lending efforts with the initiatives of the SBA. And this is obviously an area that SBA is prioritizing. It's an area that we've always been really active in. So we were very pleased to see this enhancement because, we bank a lot of companies already in the food and beverage industry. So this was very welcome from our standpoint, and even just more encouragement to continue to help lend into this industry. And I also think it's important to recognize that the timing of the change. I think we're all aware that businesses are still navigating labor challenges, margin compression, supply chain disruptions, and at the same time, to be competitive, it's requiring additional investment in equipment. Automation is a big item right now. We're seeing facility upgrades, and this policy creates an environment where lenders and borrowers have more alignment, and greater loan limits, which I'll touch on as well, to allow these initiatives to take place. And the result is the food industry and the operators have more financing opportunities available today than they have in the past with some of these enhancements that I'll touch on. So these are some of the specifics. This slide, and I'll touch a little bit on what's changed, who qualifies, and what businesses can take advantage of some of these new opportunities. So the headline here is that expanded access to capital, and the biggest benefit is the SBA has increased their SBA guarantee from the typical 75% to 90%. And again, this really gives lenders additional flexibility in structuring to help businesses access financing that may have been tougher to do in the last couple of years. I would say another significant change is many supply chain businesses are now eligible, eliminating some of the additional documentation that was needed. So in the past, SBA has always had this international trade loan program, but there was very specific parameters on what business qualified. You had to do at least 10% exporting. We had to have really detailed projections that showed, how a business was going to, exceed their 10% importing pro forma that they have in the past. We had to get very detailed quotes on the equipment that was going to help that business get there. And a lot of that red tape has been removed and the parameters have been brought in so that, really any company within the food supply, even warehousing industry likely falls into this new category that has expanded access to capital. I think the SBA has recognized that, companies within this industry are facing more and more competition, more and more costs, and this is a way to help encourage lenders like us to do our part and get capital out there. I think an example that we're seeing quite a bit of is within food manufacturing specifically and investing in automation. Labor's been challenging, margins have been compressed. It seems like a lot of companies are looking at how they could implement some automation and equipment upgrades to help continue to expand. And that's been a well-utilized use of the program. What businesses are impacted? So this just gives a little bit of a highlight of what industries are included. And maybe to take a step back, even if your business isn't in one of these industries, most are still eligible for SBA financing. This is just the kind of expansion of the international trade loan program. And I'll touch a little bit more on that, but this is what these industries is what the international trade loan program has been expanded to. And one thing that surprises people is really how broad eligibility is now. Like I said, it was very narrow in the past. Now it's a lot more than manufacturers that are exporting. It really extends to the whole ecosystem. From farms to wholesalers to distributors, cold storage facilities. These are all some of the newer industries and NAICS codes that have been added. All right. So just maybe talking about how SBA financing supports the food industry and operators. And this is where we really encourage businesses to think beyond simply borrowing money. When I talk about SBA and explain SBA, I encourage people to think about some different questions they may be considering in their business. Are you running out of warehouse space? Are you carrying too much shorter term debt that's really eating into your working capital? Is there a competitor that you may want to acquire? Maybe you're dealing, like I said, with some operational inefficiencies, and you really would like to invest in some additional capex or some automation. These are all pretty widely used benefits of the program, and you can see from some of these examples I have here, we do a ton. Maybe just going through the different scenarios with companies that are expanding. They're expanding their production through buying another facility, adding on to an existing, or simply adding additional capital expenditures with equipment. We do a lot of acquisition financing, which I'm going to touch on here in a couple slides. Refinance, it's something I'm going to touch on towards the end too, but we do a lot of refinance, and I think it's an underutilized use of the program. A lot of companies within the food and beverage industry, they may have some shorter term conventional debt. And the nice thing with SBA is the shortest term is typically 10 years. So if you have a 3, a 5, maybe even a 7-year conventional loan, that typically is able to be refinanced into a 10-year term and amortization, which really does help free up some cash flow. Working capital, we do quite a bit of working capital if it's part of an expansion project and you're adding a new production line. Obviously, there's going to be some additional expense with that we're adding working capital to for hiring, marketing, pretty broad uses of the program for working capital. And then lastly, succession planning. So maybe there's a partner you're looking to buy out, or perhaps you're looking to sell and you want to understand some financing options for a potential buyer. Again, all very well utilized uses of the SBA program. This is also a really exciting major development. Is just last week, SBA made an announcement that they are increasing the loan limits from 5 million to 10 million. Historically, most businesses had an SBA limit of up to 5 million. But as of last week, they made the announcement it's going to be effective here in the next month and a half. Businesses will now have a limit of 10 million, and that's to be used between the SBA 7A and the SBA 504 program. So historically, if a business borrowed $5 million to the 7A program, they had very little left to borrow with the 504 program. And 504 is typically used for real estate acquisition, equipment purchases. So what would be challenging for growing businesses is, that first SBA loan can really help out, but then they were kind of stuck and they were out of their SBA limit. This now lifts that limit to 10 million. And I would say for manufacturers, it's even higher than that. It's based on a per project limit. So, and if there's specific questions on that, I'm happy to talk through it. But this is a monumental change for the small business community because it essentially doubles the access to capital through SBA. And I think what's so important about it is it really allows businesses to preserve liquidity while still investing in their growth because SBA requires a lower down payment than conventional lending. Just when we're talking about kind of growth, succession planning, and transitioning, one thing that I've noticed with my customers over the last 20 years is growth isn't always organic. Some of the most successful companies that I've banked over the years have grown through acquisitions or even strategic partnerships, and SBA is a great program for that. This slide here just lists some of the benefits to that. Benefits the borrower, and the reason why I have benefits to the borrowers and sellers is at any given time, you may be a potential seller. And I think understanding how this program can help you broaden the list of potential buyers is valuable. And this just gives a quick overview of some of the benefits to the borrowers. You have a longer repayment term, typically with SBA. It's 10 years, assuming there aren't there isn't commercial real estate as part of the transaction. If there is, it could be up to 25 years. You're typically putting 10% down for the acquisition. Conventional lending, it really depends on the type of transaction, but it could be 20 to 30%. And what else is really impactful is we're able to include working capital as part of the transaction. And that's amortized over, a 10-year term, assuming there's no real estate, and a 25-year term, if there is real estate. So incredible long-term financing options. And then benefits if you're a potential seller is, the obvious one is there's more potential buyers that could put 10% down on a purchase than 20 or 30%. It's a longer repayment term, so it helps their success. A lot of times we see a seller note as part of the equity injection, which is permissible too. So benefits all around. And I might pause for a moment. I know I kind of have talked through a lot in the last few minutes. Are there any initial questions before we move on?
We have, excuse me, we have one. It's from Lisa. Her question was, how are you thinking about AI and the opportunity risks for a business? What type of conversions regarding AI are you having with your clients?
Yeah, that's a great
Conversations,
question.
I should say. Sorry.
Great question. And I think it's so different based on the industry and business. Like there's no question AI is going to be a disruptor and also like a value add enhancement to a lot of businesses. I think the encouragement that I would have, and just from talking with different companies, is like staying ahead of it, like understanding how your peers and competitors and industry is utilizing AI. I think there's a lot of good that's coming from it. But it is important. I know from us on the bank side to stay in the loop and utilizing different programs that can create efficiencies. And I think most industries have that same benefit. It differs so much based on the industry, but that's another use of the SBA program. And we have seen some of our borrowers recently borrow, not necessarily just for AI, but part of their expansion is operational efficiencies, which part of that is a technology expense that we've seen included in our project financing. Yeah, great question.
Thank you. Anybody else have questions? I have some questions as well, but you can probably get started, continue if you have some
Good
additional
deal.
stuff you would like to share. Yeah.
Yeah. So this is where I think SBA financing becomes specifically powerful. It's just through being able to acquire strategic competitors or just continue to grow your footprint. Obviously, as most know, acquisitions, a lot of them require a lot of cash, and SBA is a great vehicle to limit that cash. So again, typically 10% down for an acquisition. If it's within the same industry and your balance sheet can support up to 100% financing, that is now a eligible use of the program too. So that's something we can look at if you have an existing business, you're acquiring a competitor. It's based on a pro forma balance sheet calculation, but there's a way for you to get up to 100% financing as well. And again, you're acquiring a strategic acquisition with long-term financing. And again, we're pretty flexible in what can be included within those project costs outside the acquisition. A lot of times it's inclusive of working capital as well. And it's a great way to expand. I think, especially in today's market, scale matters, especially with buying power and inventory levels and everything else. And SBA could be an incredible option for that. I touched on this one briefly, but utilizing SBA to refinance, we've seen so many tremendous success stories with refinancing conventional debt through SBA. And I would say that the biggest one is the cash flow it frees up. Obviously, if you have incredible terms now, it's a similar amortization and rate that we would offer. There's no point to refinance, but the majority of the time, it's a 3 or 5, maybe even a 7-year conventional term with a similar interest rate, and just being able to refinance that into a 10-year term frees up a pretty significant amount of cash flow. So, as you think about your balance sheet and what debt you have on there, whether it's real estate debt, equipment debt, vendor debt, consider SBA. That could be a great opportunity to really free up some cash flow and get advantageous terms. In closing, I think a couple of things on just like FWB and Advantage. I think Advantage that we offer is, a lot of the experience. We've got an incredibly experienced team that has, we've done SBA lending, which could be a nuanced program. I'm sure there's plenty of people on the call that have heard horror stories of SBA, and a lot of them are true, right? Like SBA, any bank can do it. But I would tell you, if the bank doesn't have a dedicated SBA team, like that's where a lot of those horror stories come from. We're a preferred SBA lender. We do it well. We also are very transparent. If it looks like it's an opportunity that it's not going to fit for us, or you're better suited somewhere else, like we're transparent about that. We want to see, everyone succeed, whether it's with us or without us. So, yeah, I think it's an exciting time to be administering the SBA program. There's a lot of really positive changes. There's obviously a lot of disruption going on, across the economy, especially within this space. And I like sharing that the reason I stayed, with SBA lending really my entire career is because it's always relatively stable, no matter what's going on with the broader economy. I'm sure everyone has a horror story about a bank that they worked with that decided to get out of XYZ industry and left them hanging. I'm not experienced that in SBA. SBA is always pretty stable no matter what's going on because it's a federally guaranteed loan program, and SBA expects their bank participants to be stable. That's why SBA is helping with the guarantee and everything else. And also, the nice thing with SBA that I didn't touch on is every SBA loan is a fully amortizing loan, whether it's a 10-year term or a 25-year term. And what that means is once you have your loan, as long as you're making your payments, the loan can never be called. The loan's not going to come due before it's fully paid off because it's fully amortizing. And conventional, that's not the case, right? Everyone that has conventional financing could attest that it might be a 5-year term and then you have to pay it off. And if your business is down that year, the odds of that bank refinancing it are low, right? We see a lot of opportunities that come to us from that perspective too. So it's a stable loan program. It's continued to grow pretty substantially over the last 10 years. I think many people are realizing that it could be a good use for them. And yeah, we're thankful to be a participant in the program. Really thankful to be invited to present and share with you guys. And yeah, if there's any questions you have, I'd be happy to answer them. And if there's something that comes up after the call that you wanted to walk through, my contact information will be included, and I would be delighted to talk to you. Thanks so much.
Thank you so much. And yeah, like Gabe said, we are going to share this presentation along with his contact information via email post event. So that way you can reach out to him regarding any questions that you have after this. But I did have a couple of questions that I wanted to ask. When you think about smaller businesses trying to compete with the bigger players in the market, how can an SBA loan level the playing field for them?
Yeah, great question. I think a couple ways. One is obviously through potential acquisitions as they come up to continue to expand capacity. And also what I've seen, our customers that have, adequate working capital and adequate inventory levels, they're the ones that are weathering the storm, I think better than others. And that's really what SBA is used for, right? Is to help replenish inventory levels, to help ensure there's adequate working capital, and if there's equipment or real estate fixed assets. To take a step back, I see a lot of companies get into trouble is they use most of their cash for like longer term fixed assets, like real estate or equipment. They may put 20 or 30% down for that. My advice is typically put 10% down through SBA and preserve that extra 15 to 20% in liquidity so that you could kind of help weather the storm and keep adequate inventory levels and everything else. And then when the right opportunity comes to expand, whether it's organically or through acquisition, think through that.
Thank you. And a follow-up question to that, because we've alluded to it a few times regarding disruption and supply chain issues, and obviously that's something front of mind for a lot of businesses right now. And so, what are some good examples of how people can use SBA loans to help with, supply chain issues, rising ingredient costs, things that are probably going to be a little bit more prevalent in the next couple of years?
Yeah, we're having a lot of these types of discussions right now. One, it kind of circles back to the my last answer, which is like increased inventory levels. That certainly helps as there's delays with especially international shipments. But I get that that's an easy answer, not always hard to, and not always easy to accomplish. Right, a lot of times it requires additional capital, but also additional storage, which kind of leads me into the next one is having adequate and sustainable storage capacity so that you could store additional ingredients and help weather some of the disruptions. Um, and we see that done a lot through SBA. SBA is, like I said, a longer term loan, so you could take advantage of some of these purchases, um, and be okay from a cash flow perspective, knowing that you have a longer term to pay it off. That and then just again taking advantage of different operational efficiencies. We're seeing a lot of companies invest in their operational kind of plan, their efficiencies, adding production lines where they make sense. So yeah, just thinking through some of those things, inventory, storage, those are two big ones that come to mind.
The one question we have in general, who is an ideal candidate and what is the lowest revenue needed? And what if a business is investing in an expansion and ends up showing on IRS reports as being negative because the profit was being reinvested?
Sure. We see that a lot, to be honest with you. And again, one of the statements I made is like we try to consider ourselves advisors, ahead of lenders. And, part of our job is understanding that story. So investing in growth isn't a bad, which yields a, net operating loss for a year isn't a bad thing. It's certainly not a no with us. What we typically do is we ask you to identify some of those expenses, show us what capital expenditures were made, and we typically add those back to cash flow, knowing that they're more one time in nature. And that tip, as long as we could get to a sufficient cash flow perspective from there, then we do that type of financing all day long. And it's pretty common. And I will say that's a great question. And it may have stemmed from going to a conventional lender that just kind of looks at page one of the tax return, sees a loss, and moves on. That's definitely not the case with us. Like we want to understand what led to the loss, and if it's justifiable and you are investing in CapEx, we add that back.
Great. One more question. I'm just curious as to if you have a great example of a success story that you saw in an SBA loan that you had funded for a business, and just kind of share that story with us and what they did well that helped them be successful with it.
Yeah, I mean, there's so many. I think maybe that would be relevant for this group is, we've done quite a bit in manufacturing over the years, and it's been a pretty decent focus point of mine, both through the SBA 504 and 7A program. And I have a handful that, we started off with kind of some CNC machinery and equipment, and then they bought a building, and then they expanded to a second building. One that comes to mind in the Chicagoland suburbs. I've worked with the same manufacturer for 20 years when they were just at about $1 million in revenue, and they're at 45 million now. And the reality is this company could easily get conventional financing or SBA, but he loves SBA because of the flexibility. And not all those years in the last 20 years were perfect, but he never had an issue with a loan coming due. He had to navigate through. He was able to kind of work through it, and then the following year or 18 months later, he's kind of back to where he needed to be. And he always prioritized that is the flexibility. Once your loan is made, it's not going to balloon on you, which is really impactful because every business goes through different cycles, and you would hate to be on the downward trend as you're looking to refinance debt. So yeah, it's a Chicagoland manufacturer that comes to mind. There's a couple of them, but this one was actually one of my first customers, and it's been incredible watching his growth over the last 20 years.
I love that. And when we were talking before people joined us, you mentioned that you're seeing pretty much like an equal amount of, emerging brands versus like more established brands that are taking advantage of these opportunities. So That's a great thing to hear. And I say, people are excited about exploring this opportunity. Is there anything that they should be preparing on their end before they start a conversation with you or anybody else about an SBA loan? And then also if there's any misconceptions as far as that preparation process.
Yeah, I mean, I think if you're at the early stages, it's helpful to understand just like a basic budget. Like, what are you thinking about doing? Putting together a basic budget is always helpful. But I'm always happy to have initial conversations even before that's put together. I think one of the biggest misconceptions is like middle market companies that think that they don't qualify for SBA lending. And that's just not the case. I mean, the program has continued to evolve, and it's hard not to qualify for SBA lending. We have companies north of 80, 90, 100 million a year in revenue that easily qualify and continue to borrow with us. So don't feel like because you're at a certain size level, you may not qualify. Like, let's still have a discussion because more than likely you still can be a good fit for SBA.
Wonderful. Well, it looks like I don't see any other additional questions, but we just really appreciate your time today, Gabe. Thank you so much for. I feel like I learned so much, and I'm gonna probably have to rewatch this video after the fact. But I want to thank everyone else for attending today. Like I said, we will be sending a follow-up email with this presentation, the video, and Gabe's contact information. So if you would like to reach out to him regarding any questions that you have, feel free to do that. And thank y'all, and I hope you guys have a great weekend.
Thanks so much. And I spent some time with you guys.
Thanks.